Today, wages rise more than expected, but we're still falling behind. Hello again, it's Martin North from Digital Finance Analytics, one that is posts covering finance and problem news with a distinctively Australian flavour. Well, the wage price index rose 1% in the September quarter and by 3.1% annually, according to the latest data from the ABS, which was released today. The ABS said this is the highest quarterly growth in hourly wages recorded since the March quarter of 2012. In seasonally adjusted terms, this growth was primarily driven by increases in wages for the private sector, which grew at twice the rate of wages in the public sector. That's 1.2% compared to 0.6% in the quarter. Labour market pressures in the private sector, combined with the largest Fair Work Commission award increase in more than a decade, saw rises in both the size of average wage changes and the proportion of private sector jobs recording a wage change. The average size of hourly wage increases for those jobs where the wage rate moved was 4.3%. That's up from 2.9% in the September quarter of 2021. Nearly half, actually 46.4%, of private sector jobs recorded a change in their hourly wage rate this quarter, compared to around one-third, actually 33.9% in the same quarter last year. The annual rate of growth at 3.1% is the highest recorded since the March quarter of 2013. The growth rate in the private sector wages was stronger than the public sector at 3.4% compared to 2.4%, continuing the trend that started in the June quarter of 2021. This quarter, a significant contribution to wage growth came from jobs paid by individual arrangements. These are mostly private sector jobs where employers paid increases based on end of financial wage and salary reviews or interim increases as a retention strategy. In the annual wage review of 2021-22, the Fair Work Commission determined a $40 a week increase, which is equivalent to between 4.6 and 5.2% wage increase. The decision directly determined the size of increases in jobs paid under modern awards, with the majority of those jobs receiving a 4.6% increase. It was a significant contributor to hourly wage increases in the retail trade, administrative and support services, accommodation and food services, public administration, and safety and healthcare and social assistance industries. In original terms, the highest quarterly and annual growth was recorded in the retail trade industry at 2.4% and 4.2%. The annual rate of growth included two award increases within the year. The education and training industry recorded the lowest quarterly and annual growth across all the industries at 0.8 and 2.2%. Focusing on private sector jobs that received wage rises this quarter, the time since the last pay change indicates that more than a third of these jobs, around 36% actually, had received a pay rise less than 12 months ago, and a further 52% received a rise this time last year. Only 12% of jobs that received pay rises this quarter received their last pay rise more than 12 months ago. That's a figure similar to the pre-pandemic September quarter averages. The average size of hourly wage rises for public sector jobs that recorded a wage movement was 2.3%. That's similar to the average size recorded before the pandemic. The proportion of jobs that received a wage movement was 30%. And that was also similar to pre-pandemic levels. Focusing on public sector jobs that received wage rises this quarter, the time since the last pay change indicates that nearly half of those jobs, about 45% actually, had received a pay rise less than 12 months ago, and a further 32% received a rise this time last year. Only 23% of jobs that received pay rises this quarter received their last pay rise more than 12 months ago, a figure much smaller than in September quarter of 2021 when it was 56%. Finally, across the states, South Australia had the highest quarterly growth rate at 1.8% of any state since the September quarter 2010, with a significant portion of jobs in the state recording wage rises. But Tasmania had the highest annual increase in wages at 3.6%. On the other hand, the Australian Capital Territory recorded the lowest quarterly rate of growth at 1.2%, and the Northern Territory recorded the lowest annual rate of growth at 2.5%. So these results were a little stronger than expected by the markets. On the other hand, of course, they may be a little stronger, but they're still well below the real inflation level. And seeing that that's knocking around 6 to 7 to 8%, depending on how you measure it, it means that most people are still going backwards in terms of wage growth. So there's a lot more to be done to try and move forward with real increases in take-home pay. But on the other hand, you can see that there is a bit more movement now. But the other point there is, of course, this then will put more concerns in the minds of the RBA, because they've said consistently that lower levels of wage growth will be helpful for containing inflation. So the reverse is also true. If wages growth is higher and goes on for longer, that's going to stoke inflation. And in fact, if you look at wages growth in Australia relative to some other countries, it's still lower, but moving up. So as with every piece of economic data, there is always good news and the bad news. But the good news is wages are up a bit. The bad news is we're still going backwards. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.